Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated. You are listening to the Spend Life Well Show with Kingdom Advisor Mark Trice and Jesse Hamilton. Mark and Jesse are passionate about seeing you spend life well. If you want to save for and invest in the future, then this show is for you. Call now and join the conversation with your financial questions. 512-452-1120. 512-452-1120. Mark and Jesse will answer your questions and discuss practical financial principles based on a foundation of biblical wisdom. So if you're ready to quit worrying about your finances and begin to spend life well, then call 512-452-1120. And let's meet your host, Mark Trice and Jesse Hamilton.
Well, good morning, everyone. 2 Timothy 3:16 through 17 says, all scripture is God-breathed and useful for teaching, rebuking, correcting, and training in righteousness, so that the servant of God may be thoroughly equipped for every good work. Hi, I'm Certified Kingdom Advisor Mark Trice, and I want to welcome you to the Spend Life Well Show, where we apply biblical wisdom to your financial journey. Now, folks, this is a live call-in program, and you can call us anytime with your financial questions at 512-452-1120, 452-1120. And Jesse is out today having fun with his wife out in Central Texas somewhere. But we have a very special guest today in the studio. We're joined by Jerry Bowyer. Jerry is the author of The Maker versus the Takers, What Jesus Really Said About Social Justice and Economics. He's also a World Opinions columnist and President of Bowyer Research. Jerry, thanks for joining us on the Spend Life Well show today.
Mark, a pleasure to be with you. I've been looking forward to this.
You know, I had to say thank you for writing this book, The Maker versus the Takers, because as I've listened to you at various Kingdom Advisor conferences over the years, I'm always furiously taking notes, and I cannot keep up. So I'm glad you put this into a tome of sorts of your research of following the ministry of Jesus and really helping us understand how Jesus really viewed economics. And it's fascinating to listen to some of the stories that you've been able to weave together in a very, very meaningful way for the reader and stuff. So thanks for doing that, first of all.
My pleasure. I'm glad you're furiously taking notes rather than taking notes that are furious.
Yeah, I said every time I would listen to you, I would say, when is he going to put this into a book, or at least do a white paper so we can actually listen to him and ask questions. But that, so the book came out at the most wonderful time for a book to come out during the pandemic. Mm-hmm. And how's the response been since you released that in 2020?
The books have done very well. We're just about out of them, as a matter of fact. So the publisher asked permission to do a paperback, and I said, absolutely.
Great.
Go right ahead. And so it's getting harder and harder to find them. So we don't have many left. Like if you want to do a bulk order, I don't know if it could be fulfilled, but there's still some. You can buy them on Amazon or whatever.
Yeah. In fact, we've got a link on our website, folks. If you go to the spendlifewell.com and click on the show page, down at the bottom there, you can see a link to Jerry's book, and you can order that off of Amazon directly for you. I encourage everyone to get that because it's going to be a perspective that you have not seen and you certainly don't hear from the pulpit.
Yeah, and also Kindle and audio, those don't run out. So, and also the reviews have been good. I didn't expect this book to sell well, and I didn't really want to write it. So I wrote this book because a friend in publishing kind of nagged me into writing it. What I liked doing was the research, because I didn't want to write a book. I wanted to understand what Jesus was saying about economics and social justice. I wanted to know what he thought. That was the point. And when I was doing this research, I had no thoughts whatsoever about writing a book about it. What's happened is that the book is largely, I'm not much of a celebrity. I don't have a distribution network. The book was kind of an orphan. The agent who took me to the publisher then left that publisher. So the publisher didn't even know who I was. So they didn't do any marketing. And what's happened is, by God's grace, people have read the book and they just tell other people to read it. And it's just been word of mouth. So it never had that big spike of a celebrity book comes out
Right.
and then tails off. It just keeps going like that, and
Yeah.
maybe even going up a little bit. So we just got our report for this year, and it's the same rate of sales as it was last year and when it came out about 2 years ago. So I really like that. I like that people are recommending it to one another. And I'm pleased with the response. And I guess I was overly pessimistic about whether someone would want a lot of detailed depth, because most of the conversations about Jesus and economics that I'd seen before were woefully shallow, in the sense that somebody had already decided Jesus was a socialist, and they go and they skim the red letters, and they kind of misquote Jesus a little bit. It's easier for a camel to go through an eye of a needle than for a rich man to go to heaven, which is not really the quote. But they do that. And then other people, conservatives, were kind of saying, well, he doesn't really mean it. Or I know it sounds like Jesus is saying that, but it's really just talking about our heart. He's not actually talking about money or the economy. He's just talking about our personal relationship with money. And I was frustrated by the shallowness of that. So I wanted to go
Well,
deeper.
what do you see as the biggest misconception about Jesus' teaching on economics that you've seen from evangelical Christians?
That he is teaching on economics. That's the biggest misconception. The misconception, well, the truth is he is teaching on economics. The misconception is that he isn't. And what I've seen among my fellow evangelicals is a reduction of everything down to your heart relationship with money, paying no attention whatsoever to the economic system. And so when Jesus confronts the rich young ruler, they ignore the fact that he's a ruler and just read into that account something the account never said, which is that Jesus used his omniscience powers to look into the heart of that man and know that he had a dysfunctional relationship with money. And that's why Jesus told that man to give it all away. And if you don't have that dysfunctional heart relationship with money, then that doesn't apply to you. And that's not what's going on. That's not what the
Yeah.
text is saying. So to me, it's pretty clear that the reason that Jesus is telling this particular man to give the money away is because this particular man stole the money. He defrauded the poor using his political connections, his political power. That's why the text tells us he's a rich young ruler. So this is not just for people who are money idolaters, or this is not, for everybody, which is kind of what some people on the left would say, that everybody has to give it away. Instead, it's that people who've used state power to take it away from the poor should give it back. It's not redistribution, it's redistribution. The redistribution took place when this guy used the power of the state to rob the poor and middle class. This is restitution.
Now, I'm a student of economic geography so this book was very fascinating to me to be able to watch Jesus's progression and through his ministry as he moved closer to Judea and closer to Jerusalem. And it was interesting. Of course, we know the Gospels were written to different audiences throughout there, but you mentioned the rich young ruler. I mean, that's something. What was fascinating to me was Jesus knew where he was
Yes.
and who he was talking to.
Yes.
And that's, I think a lot of people miss that when they're reading the Bible. They miss the context of where Jesus was and who he was talking to.
And where he was in Judea, the capital province, and who he was talking to was a senator.
Right, who typically inherited their wealth. And so I kind of wondered
and used political power to build that wealth. It was endemic of the ruling class of Judea to use political power to build that wealth. How do I know? Because later James, who might be Jesus's younger brother or might be his disciple, we don't know which James for sure.
Mm-hmm.
Later James says to the poor Christians, do not rich men defraud you. Same word that Jesus uses when he talks to the rich young ruler. Do not defraud. Do not apostereo. Do not rich men defraud you and drag you before the magistrates, drag you before the judgment seats. So it was the business model. If you're a young member of the Sanhedrin, your dad got rich using the political power. He dragged people before the judgment seat so they didn't have to pay them their wages. And then this young man would have inherited that and followed the same path.
So, do you think a lot of people misinterpret the parable of rich young ruler? That I know I hear a lot of people say, "Well, if you really truly want to be a Christian, you need to sell all your possessions and give to the poor."
No, but if you're a thief and you truly want to be a Christian, you should give back what you've stolen.
Right.
Same with Zacchaeus. Zacchaeus, again, a tax collector, a dishonest profession. John the Baptist confronted them over what? Over defrauding. Zacchaeus, Jesus says, I'm coming to your house. Zacchaeus says, whomever I have defrauded. It's a first class conditional in the Greek. So it's not if I've defrauded anyone, it indicates I have. Whoever I've defrauded, I'll give back 4 times. Salvation has come to your house today. So Zacchaeus stole the money, and Jesus is, encouraging it. Zacchaeus, Jesus doesn't say give it back. Zacchaeus knows. He knows what's going on here. Zacchaeus knows he stole it. So before even Jesus says give it back, Zacchaeus says, I'm going to give it back to the poor. And at that point, Jesus says, well, salvation has come to your house. So again, if you've stolen the money, you should give the money back. That is a completely different thing than someone. Jesus was in Galilee. There were wealthy people in Galilee. There were wealthy people very close to Nazareth. You can go to Sepphoris, which is very close to Nazareth, and you can see they dug up. There's a mansion there, but it was a market-centered place. The people in Sepphoris were, by and large, the ones who were wealthy buying and selling in a marketplace. And there's no confrontation with Jesus there in Sepphoris or in Tiberias or in Bethsaida or Capernaum or Magdala, which was a fairly wealthy fishing village. No confrontations over wealth. There's not even a confrontation over wealth with Joseph of Arimathea, who was a member of the Sanhedrin, but was, according to church history, early church history, a tin merchant, so making an honest living. All of the confrontations are when Jesus is near the capital, in the capital region, and talking to somebody who's associated with state power and using state power to extort wealth from the poor. So we've rich young ruler, Zacchaeus the tax collector, and then the money changers in the temple.
Well, talk a little bit about Jesus's upbringing. You mentioned that you lived near Sepphoris and that economy that was going on. A lot of people have the misconception that Jesus was just poor, and so therefore we should all be impoverished and give everything to the poor. But talk about his upbringing a little bit and what you've been able to uncover in your research from the archaeological data that you've uncovered to what says in Scripture. And because you're right, we don't see any confrontations about wealth from Jesus when he is in his early ministry up there.
Right. I mean, he'll tell the disciples, who a number of them were entrepreneurs, clearly, come and follow me, and give those things up. But he's not confronting them over their wealth. Right?
Correct.
It's not evil. So he was an artisan. He was a tekton, which is usually translated as carpenter. I think that under translates it a little bit. Carpenters were skilled laborers, and they also worked with stone, because when you're building things out of stone, you need wood frames for them. All right. So more like builder. And I think we've got this idea that Joseph and then later Jesus were just like fixing doors all day. There's maybe 100 people in Nazareth, maybe 200. How many doors are there to fix? How many, plows are there? Not that many. I mean, it's not a very big village. So, but they were in the middle of a gigantic building boom. Sepphoris had been destroyed around the time Jesus was a little baby, and during his childhood age, and children worked, and teenage years, that would have been rebuilt. So 2-hour walk away from a small village without a lot of carpentry and stonemason work, there was a gigantic building boom going on. So
and
Jesus,
I think you said a lot of the archaeological research shows it was a very prosperous region and a prominent trade route.
Sepphoris was very prosperous. Nazareth was kind of on the way up. Nazareth would be like maybe think about some of these maybe inner ring suburbs or even exurbs where there's a lot of people who are like home builders who live there. In my community, right? There's a lot of people who are small business owners where I live. Not wealthy, but definitely not poor and coming up. And that's what Nazareth would have been. And the whole Galilean region was coming up. It was very entrepreneurial. I think there's one particular archaeologist who said pretty much anytime you dig up another village in Galilee, you find 2 or 3 shops.
Yeah.
In pretty much all of them. So
Wow.
you had a lot of shop owners. And so wealthy, no. But I did a calculation, and I tried to stretch to like pull the number down. Where would an artisan rank in terms of percentile of income
Okay.
at this time in history. Because remember, this was a building boom. Herod was known as the great builder. That's Herod the Great. But later on, his sons continue the building boom. So Jesus had a building boom in Sepphoris, very nearby. There's a building boom in Tiberias. Herod was training people, paying people to learn to quit their other jobs and learn to be builders because there was a shortage of builders. So builders were very much in demand, and they would travel around and be part of these large building projects.
So he was around
So
a
probably
lot
I
of
would say
wealthy people.
at the lowest level, artisans like him would be maybe 80th, 85th to 90th percentile
Okay,
of
so
income.
not impoverished at all.
No, not far from it. Right.
We're talking with Jerry Bowyer. Jerry is the author of The Maker versus the Takers: What Jesus Really Said About Social Justice and Economics. We're going to take a break here in just a moment. When we come back, we may wrap up a few more questions about the book, but I want to get in, Jerry, in just a moment. We actually have some callers coming in, but they'd like to talk about bonds versus the book.
I can
And
I can do bonds. I can do that too.
so
Oh, it
when
might
we,
be a painful topic of conversation, bonds, but
well, we're listening to, you can find Jerry's book on our website at spendlifewell.com. Remember, you can always call us in the studio, 452-1120, 452-1120. When we come back, we'll continue our conversations with Jerry. You're listening to the Spend Life Well Show. We'll be right back. Welcome back, everyone, to the Spend Life Well Show. I'm Certified Kingdom Advisor Mark Trice. Joining us today on the program is author and economist, opinion writer, Jerry Bowyer. Jerry is the author of The Maker versus the Taker: What Jesus Really Said About Social Justice and Economics. And Jerry, thanks for joining us again today. This has been a fascinating first segment. And if we had about a 3-hour show, we could cover everything that's on your mind today. But we got a call that came in during the last our last segment. There is from Jefferson. Jefferson just has a question about 5-year bonds that are tips. He's just listening in. I think the challenge, Jerry, is that we've got long-term treasuries that are down more than 20% year to date, and
yeah,
people that are used to looking for yield in their bond portfolio are nervous, and they're exploring all sorts of different options that are out there. Tips, which stand for, that basically are inflation protected type bonds. A lot
right.
of people have questions about those since just yesterday we got the CPI data, and oh, surprise, surprise, inflation is still going up.
Yeah, quite high, 8.6% year over year. Down a little bit in the month over month. So if you look at the high frequency data, there's a little bit of complexity to that story. But yeah, we have an elevated inflation period, and a lot of people were in denial about that. And the Fed, back in the spring of 2020, saw deflation and said, well, we can't have deflation, so let's just throw everything but the kitchen sink at it and just vastly increase the money supply. So just like in your personal life, it's the same with the economists. The thing you do to get out of the jam, if you do something to get yourself in a jam, then the thing you do to get yourself out of that jam creates your next jam, right?
Right.
So, I mean, I know this is somewhat controversial, so I'm trying not to take sides, but what I would see as excessively broad and long lockdowns in response to the pandemic, created obviously deflation. If you're not allowed to buy things, then the price of
Right.
them goes down,
Right.
right? So instead of thinking of that as a real deflation problem, it's not, it's a shutdown problem. So instead, they used monetary, practice, monetary policy to go after it, and just pumped money out of the system like crazy. So then when people go back and buy again, what happens? An explosion of prices because of all that money. So we're in an elevated period of inflation, and I don't think it's going away too soon. I'm not saying it's going to stay at almost 9% indefinitely, but I do expect it to be elevated for a fairly long period of time. And that's a concern. And that has moved people towards TIPS, Treasury Inflation Protected Securities, because that is an investment specifically designed to protect you from inflation. And because people have been buying tips so much, when you buy a bond, the price of it goes up, which means the yield goes down, right? Because, that's just how the math works. It's numerators and denominators. The yield is negative on tips. I mean, that's how much in demand they are.
Right.
So people look at that and they say, well, how can I possibly make money on a negative yield, right? Well, but people thought, how can I possibly lose money on bonds which have a positive yield? And the answer is with bonds, you make or lose money two ways. You make money because you get those interest payments, but you can also make money when the price goes up, and that's a capital gain, which means you can lose money when the price goes down. And for something like 30 years, bond prices were almost always going up. And people got to think like, oh, I'll just collect my coupon and nothing bad can happen to me. And now it's the shock of their lives to see capital losses coming through in their bond portfolio. So that's why they're looking towards tips.
Well,
But
and Jerry, I mean, you were just a young, very young adult when this last bull market in bonds started in the early '80s,
yes,
and that's coming to an end. And we saw
I think so.
on Friday the 20-year the 10-year Treasury closed up at 3.15%. We haven't seen
Yes.
those levels in a while.
Yes. And they're still below the historic average for a 10-year, which is about 5%. They're below the natural interest rate. So the Fed still has its thumb on the scale. We still have unjust weights and measures. The Fed has had like their foot on the scale for a long time. And now their hands on the scale, and now their thumbs on the scale. And we say, oh, the Fed's tightening. No, the Fed's not tightening. It's just not loosening the way it used to. It's kind of holding steady. So, I mean, for interest rates to come back to the natural rate, prices would have to go down a good deal more. And I don't think that people were psychologically prepared for the idea that they could lose so much money in the bond market, and that's a shame.
So Jefferson, I mean, you're still listening, and the question that you had there is very important. You want to make sure that you're talking to a financial advisor a little further before you make any decisions to invest in tips or anything for that matter. So I encourage you to reach out. You can reach out to us at spendlifewell.com, or if you go to kingdomadvisors.com, you can also look for a certified Kingdom advisor in your area. So take a moment to find someone that'll be happy to talk to you, and we certainly be happy to talk to you during the week. So Jerry,
tips are complicated.
They are.
Don't do
really
tips
are
on your own. Yeah.
Yeah, it's something a lot of people think that's just a panacea for everything else, and a lot of people are uninformed about really how tips really work. So Jerry, you saw inflation year over year tick up. We saw real wages drop, and we're seeing more borrowing levels go up. People are using more and more of their credit cards. They're running out of the stimulus check that they got a year ago. How is this all going to perpetuate the inflation problem? And then I'll add on another layer to that question. Do you think here in about a month, we're going to get data that says that the second quarter in a row of GDP was also negative, and surprise, surprise, we're in a recession? Unpack that for a moment.
So first was, how does all this work with inflation? And second, will Q2 be negative?
Yeah.
Let me work backwards. I don't think Q2 will be negative. I think it'll be low. Now, if Q2 were negative, second quarter were negative, then that would fit the dictionary definition of a recession, which is 2 negative quarters in a row of growth.
Right.
Now, there's also an official call from a committee of economists, but that's kind of political. So I just like to use the dictionary definition.
These are the same people that define the word transitory for the last 6 months or so?
In many cases, yes.
Yeah.
And these are the same people. They tend to be a little partisan, et cetera. So I think we're in a half a recession. I think we had a negative quarter, and then we're going to have a positive quarter. And then people are like, whew, no recession. And I'm like, no, recession would be good.
Yeah.
Recessions are necessary purgatives when the government creates a bubble. They're painful. I don't like them. I've been unemployed during a recession. It stinks. But a recession can be short, and you can say, okay, we built too many .coms. We didn't need all these .coms. We didn't need pets.com. We're done. You're gonna sell a lot of those, and those people are going to go to work for something more useful. Or we can say, oh, we built too many houses for the number of people and their credit worthiness. All right, now we know we did that. We're going to sell these houses. The price of houses is going to go down, and then people are going to go else and do something else useful. It frees people up to not
Right.
work on an unsustainable bubble.
Well, a lot of
But
our
long-term
listeners,
stagnation is far more destructive, and I'm concerned that's what we're facing rather than a recession.
right? So a lot of listeners don't remember. Certainly, our younger listeners were not even alive then. But the Paul Volcker, the Federal Reserve Chairman, the Fed effectively created the recession in the early '80s because inflation was out of control. And I think that the current Federal Reserve Board feels that they can engineer a soft landing, but history does not prove them correct when it comes to creating that soft landing.
No, especially given the size of the bubble. It's one thing to do a soft landing, to do a quasi soft landing, like after the bubble in the 1990s, and then we had a pretty mild recession, right, in 2000, 2001. But the vast quantity of monetary creation and interest rate suppression that we've seen in the past, really since the Great Recession, and more again since COVID, it's pretty hard to get out of that with a soft landing. So then the question is, they face a kind of a Hobson's choice. Which do they hate? What do they fear more, inflation or recession? I think that they're more worried about recession than they are inflation. So I think in the end, I don't know, this is human nature, right? This is like free will. It's not mechanics. But I think in the end, the Fed will not have the nerve to be Volcker. So they won't compress the money supply, put us in a painful recession, and beat inflation. I think that the moment there's any real sign of recession, they'll put the punch bowl back.
So you don't think that we're going to have the Fed put again, as we've had a couple of times over the last decade?
No, and I don't think we're going to have a Fed GDP put either, where they're going to say, well, we're not going to let GDP go negative for. I think that. Well, let me put it this way: the Fed put on markets. I think the Fed will choose to tolerate higher than normal inflation, rather than negative growth for, say, 2-3 quarters.
Okay.
So they'll choose easy money. They'll choose to keep the party going. Yeah, maybe let's say they get inflation down to 6% or 5%, right? That'll look good compared to 8%.
Right.
And but then the yield curve inverts, and there's all these signs of recession, and the unemployment starts to rise. At that point, I think they'll say, "Oh, okay, we get it. We're going to keep the money flowing."
Well, we're talking with Jerry Bowyer on the line. You can give us a call here in the studio, 452-1120, 452-1120. Jerry, the president goes on a late night comedy show this week and talks about inflation and how there's really not much they can do. But one thing that they say that they can do is, let's pass my $1.9 trillion stimulus bill called the Build Back Better for America, whatever it's called. But the point being is, okay, in the same sentence, you basically told us that you don't know what to do about inflation, but we can add to the inflation by passing this $1.9 trillion stimulus bill. Any thoughts on that? I mean, is the administration really that far out of touch, or I read on the drive in this morning, we're now national average for gas is above $5 a gallon.
Yes.
And that speaks much more loudly whether or not there's a road building program or a stimulus for childcare. What do you think is going on in Washington?
What I think is going on in Washington is that Build Back Better was a plan during the campaign. It has nothing to do with inflation. It's something they want to do because it's, that's Joe Biden's political agenda. It's sort of public works, Keynesian public sector union. That's kind of where he's coming from. That's the wing of the party he represents. Populist unionism, big government, anti-corporation, as opposed to like the sort of the more woke. Now he's made his peace with the woke branch, but that's kind of his core. So he wanted to do that before. This plan was, he ran on this in the election before there was inflation. So don't tell me, hey, we have inflation all of a sudden. Oh, that's terrible. Just so happens the thing that I already have here ready to sell to you, okay, it cures inflation too. I mean, it's just the worst kind of public relations flacking. I mean, a real statesman would say, okay, listen, I think Build Back Better is a great idea. I think it's good for the long run. But of course, if we throw $2 trillion in public spending at the economy, we're not going to drive the prices of commodities down. We're going to drive them up. This will make inflation worse. Also, we don't have tax revenues going up. So we're going to have to finance this through the central bank, through borrowing that'll be done through the central bank. So that's more money creation. So although I like Build Back Better, right now we can't afford it because of the inflation. That's what a Biden who is ideologically true to his roots, but is a statesman would do. He'd say, I still like this plan, but this is not the right time. Instead, they totally go agitprop with this and say, oh, well, this plan will deal with our inflation problem. Nonsense. It'll make it worse. Of course, everyone knows it'll make it worse.
Well, I think what's interesting, and we're going to get into this in the next segment if you still have time, Jerry, but it's really, people are beginning to wake up and saying, hey, I'm not buying all this. This doesn't make sense. And I was, to quote another economist friend that I follow from time to time, he said, the misinformation that's out there wouldn't be a problem if everyone weren't so irrational. And I think a lot of people just accept what they hear. They form their own opinions. And yet I often can't watch the news because it is a propaganda machine to some extent for that particular agenda. And I think there's just there's a big disconnect in Washington as to what's really going on in the rest of America with inflation and other problems that they're just sticking to their campaign agenda. So it's a challenge. So Jerry, the markets have been kind of crazy, a little bit of volatile this year, and we had another down week this week. S&P is now down over 18%. Year to date, you've got the NASDAQ that's down over 30+%. That's just year to date. That's not from the high back in November. Where do you start seeing our stocks becoming more valued correctly, or we still have a lot of overvalue that in the price of stocks on the market?
Yeah, I think you probably still have some overvaluation in large cap tech growth stocks. 30% probably doesn't do the job. Now, I don't want to get too complicated here, but the valuation is relative to interest rate, right? So this is dividend discount model. So how do I do this? Like
we've talked a little bit about on the show in previous weeks. So go ahead.
Okay.
We got about a minute left before we have to go to break. But
all right. So when you are buying stocks that you expect to grow, where you expect the earnings to be growing 10 years out, like a growth stock, as opposed to you're buying a stock where you expect the earnings to be like in the next few years, that's a value stock. Well, when interest rates rise, it hits the growth stock worse than it hits the value stock.
Right.
Because it's the alternate use of money. So if you can get more than 3% on a treasury, treasuries look a little better to you now.
Yeah.
Right.
Yeah.
And they look safer. So that means that you're discounting that future, every stock that you buy now, what you're really doing is you're discounting the future earnings. You're saying in the future, there'll be earnings. What's that worth now? When the interest rate goes up, that kind of contracts that.
Right.
And
That's a good explanation, Jerry. We may pick that up in the next segment. But for now, we're going to take a quick break. You're listening to Jerry Bowyer, Mark Trice on the Spend Life Wealth Show. We'll be right back.
Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated.
All right. You're listening to the Spend Life Wealth Show, where we apply biblical wisdom to your financial journey. We've been talking about a number of topics with author Jerry Bowyer. Jerry is the author of The Maker versus the Takers. I encourage you folks to pick this up. I know Jerry said that there's limited hardback print out there right now, but they're all coming out with a paperback of that book. And it was interesting because you said that the growth of sales of this book has been really word of mouth, and that's amazing, because I think when people look at it and they're going, "Wow, I didn't understand that the way that I thought I did about what Jesus talked about with money and possessions," and it's one thing that we feel passionate about, Jerry, and our practice as financial advisors, because do you really think that God was really trying to get us to pay attention when he puts more than 2,000 verses in scripture dealing with wealth and possessions? You know,
Yeah.
that to me says, hey, pay attention. I've got a plan for you. And Jerry does an excellent job of really dissecting Jesus's ministry, and really gets into his upbringing and so forth. I think I always use this at cocktail parties, Jerry, but when we talk about Jesus was born in Bethlehem, and the economy of Bethlehem was really designed, had a prosperous practice of breeding lambs, sacrificial lambs, to be used for sacrifice in the temple.
Yeah, isn't that amazing?
That's crazy, and it's like, wow. Because I'm a nerd though about economic geography and different things, and when you tell me that Bethlehem was known for for raising lambs to be sacrificed in the temple, and you're like, oh, hey, that's something. And
I mean, people aren't surprised to know that Bethlehem was about lambs and
right,
sheep, because shepherds are major parts of the story.
sure,
But what they don't know is for what, right? For dinner tables? Well, no, for the temple. That's why Bethlehem, house of bread, is near Jerusalem. And, in Bethlehem, there's a gate and a tower, Migdal Adair, that is on the road from Bethlehem to Jerusalem. And so what could happen is that you could stand in the small tower and you could look down and you could inspect the sheep as they're being shipped off to Jerusalem to be part of the temple system. So the Lamb of God, who takes away the sins of the world, was born in a city where they breed the lambs of God, who would make temporary atonement in the temple for the sins of the world. And I don't think that's a coincidence.
no,
But it's lost on us. I mean, if you don't read the Mishnah, and who does, right? You don't know that that's what that town was for, and you miss a lot. And when we skim over place names, when we don't know our Bethsaidas from our Bethanis, I guess there was someone named Beth, who got a lot of cities named after her, Bethlehem. If we don't know the differences in these towns, if we don't know what's going on with the wedding of Canaan and the stone jars, something that didn't make it into the book because I didn't know it yet. If we don't know the local industry, then we're going to miss so much of what's going on in these gospel accounts.
We've got one segment left, folks. And if you want to get a question into Jerry, you can call us at 452-1120, 452-1120. If you're listening to us on social media, type a comment there in the comment section of whatever source, Facebook or YouTube. Just put that in there. We'll get it to Jerry here in the last segment of the show. Jerry is the author of The Maker versus the Takers. You can find a link to that book to purchase that on our website at spendlifewell.com. Jerry, I wanted to talk for just a moment in the time that we have left to talk about some of your efforts with shareholder advocacy and really how Christians are beginning to push back against woke companies putting out their political views that have nothing to do with the baseline business. I think Target was one of the things you talked about in the last Kingdom Advisors. And of course, they've had lots of financial trouble. In fact, after they released earnings, they came back out and said, "But wait, it's a lot worse than we thought."
Yes, I was in that annual meeting.
You were?
They revised they revised down again. And what really struck me about that is I've talked to Target a lot. That's the first company I started interacting with.
Oh, really? Okay, tell us about that.
Yeah. Well, they banned books that were skeptical about transition surgery for teenagers. And in response to a tweet. Deborah So and Abigail Schreier do books that say, hey, maybe we shouldn't encourage teenagers to get sexual reassignment surgery.
Right,
maybe stop and think about that for a second.
Right.
Someone tweets, oh, I guess you're homophobic and transphobic now. Boom, gone. The books are gone. Then there's a backlash, and then they say, okay, we'll put the books back. So I was in conversation with them about it. And it was really amazing how badly and dishonestly they handled this. They admitted to me that they made a mistake. And they said, we're going to put a process into place where we don't make that mistake again. Okay. They put a process into place. They rebanned the books, but didn't announce it. So the day before the annual meeting, I said, heads up, I'm going to ask about this at the annual meeting. Don't say I didn't tell you. And then they announced their new process, which is we won't put anything deemed harmful. We won't sell any books deemed harmful, which of course completely leaves it up to them.
Right.
And they admitted that they had banned those books. Well, they didn't say banned. So I was involved with some negotiations with them, putting forward a proposal, to put on the ballot. And they made an interesting argument to me. One, they said, well, when we engage in politics, what we're doing is we're making sure that, property taxes are kept low and sales taxes are kept low. It's like, sure, of course you should do that.
Right.
I'm talking about this culture war stuff. And they said, well, look, the stock's done so well, the company's doing well, our results speak for themselves. Okay. Does that work the other way? Now that you're imploding, now can we ask questions about the way that you've been ideologically captured and how you're misusing our shareholder money in this unjust cause? It's really amazing. But the thing is, you can shift the debate. So I've attended hundreds of these annual meetings. I don't know if people know this, but there was just a spate of pro-abortion resolutions on the ballot. Walmart, TJ Maxx, they had pro-abortion resolutions.
We had an article about this recently. Tell us what's going on with that, and how many shareholders are not even aware that this is going on, and they might vote through their proxy there for that proposal.
They very well might. Lowe's was another. We don't know how the big institutions voted on this. They wouldn't answer questions from the Wall Street Journal about it. But the Lowe's proposal got 32%. That's a loss, thank God. But it's a pretty high number. And that is suggestive to me that the institutions are at least coming down on the side of this. So we'll see what BlackRock and Vanguard and State Street did. Also, ISS, the big proxy service, they recommended voting for these. And so there's a kind of a way you talk in these proposals, but what it really amounts to is, well, if people in North Carolina can't get abortions, then that's going to put women out of the workforce, and you're going to have to pay for their maternity leave. Maternity leave costs money, so there's going to be a worker shortage because these women are going to stay home and have babies. And so this is an economic risk. So you need to take this economic risk into account when you make decisions about which stores to shut down or where to open operations. In other words, they are telling the corporations to talk about what would be wrong, the bad economic effects of reversing Roe versus Wade, and then use that as an implied threat against these states we're not going to expand there, and maybe we'll lay people off if you pass protection for the unborn. It's unconscionable that they're doing it. The arguments are utterly incoherent. I mean, have you ever been to a Walmart? There's a lot of kids in a Walmart. There's a lot of moms and dads. Now, these people they never go to a Walmart. But I do, right? I have a big family. So you go to a Walmart, there's a lot of moms and dads and kids. They're going to Walmart to buy food to feed their kids. Fewer kids, that's not good for Walmart. And don't tell me that less family formation is good for Lowe's. So it's absolute nonsense. But the thing that's really unconscionable is you might be invested in a fund. You might have voted for this and not even known it. And we'll find out. We'll find out by early September who did.
Right.
But that's a big problem, that the way your money's being used by people with an axe to grind.
If I'm a shareholder of a particular stock, and we can talk about mutual funds later on, but if I'm a shareholder of a stock, how do I even begin to understand what's going on at the corporate level? What things are they supporting, and thus my money is supporting that particular company? What do people need to do to understand this?
Well, what I've been telling people to do this, to basically do the due diligence. Don't throw the proxy away and read it carefully. These things are like 70 or 80 pages long frequently, right? And it's over. It's designed to not have your input. It's designed to technically conform with the SEC's requirement that you as a shareholder get to vote, but to make it as hard as possible. So what I'm doing now, I don't mean to sell, okay, but what I'm doing now is I've realized it's going to be hard to get a lot of people to do this. So I've started to work with financial advisors to say, let's just, if you've got clients who are interested, let's aggregate this a little bit and we'll help. Like, let's talk about what we believe. Are we pro-life? Do we think corporations are getting too woke, et cetera? And then we can set up a system that does the voting that's in accordance with our
Okay.
worldview and our
Okay.
value system.
All right.
I can't do it for individuals.
Right.
It just wouldn't work for me. But what's happening, I didn't intend for this. This has become our new business, basically,
Yeah.
unintentionally. We just decided to take responsibility for what's in the portfolio and start watching and reading these things carefully. And then it turned out that it got so out of hand with Disney and the Parental Rights and Education Act that now people are very interested in this. So this is something that we're doing. It's hard to do on your own, but you can do it. And I would encourage you to do it.
Now you wrote a letter or a statement that you used for Netflix, right? If I recall that correctly, you mentioned that back
I
in
did one
February.
for we did something for Netflix about the Cuties
Uh-huh.
trailer, which wasn't cute at all. It was
Right.
groomies. Maybe we should call it groomies
Grimmies.
trailer. I also wrote a general statement, which I sent out on behalf of an institutional client, and my clients are confidential, so I won't say.
Right.
Which basically said, stick to your day job. CEOs, if we're invested in you, we like you. We don't invest in companies that we think are poorly run, but you are wandering off of the thing you're good at into the thing that you're terrible at. And we're telling you as shareholders, we end up not giving you our money so that you could transform the sexual identity landscape of America. We've given you money so you can sell shirts and shoes and pay us a dividend. Stick to that, please.
I think people have become afraid, especially with the growth of wokeism and really the and in corporations, the diversity, equity, and inclusion movement. They're afraid to speak up and say, "Hey, this doesn't make sense." And I think it's interesting that diversity, equity, inclusion, kind of the Latin word for Dei, which is that their God now? Is this
Yes.
is
They of God, right?
of
It's
God?
Deus in the genitive case. Yeah, they are playing the role of God. And what did Howard Sam Zell, the real estate guy, was talking about Larry Fink of BlackRock, who's the big ESG guy, and he said, "When was Larry Fink made God? I didn't know that Larry Fink had been made God." Charlie Munger from Berkshire Hathaway said, "I like Larry Fink. I just don't want him as my emperor." And I don't mean to just pick on BlackRock because the Vanguards, a lot of people are doing it. So who's in charge? Well, in the end, it's the shareholder. In the
Right.
end, it's the person listening now. But everything, nobody told you how to do it. Nobody told you you could do it. And frankly, there's been a lot of distraction towards more like boycotting. Like, well, if Disney has a gay pride day, then you should sell your Disney. Now, if your conscience bothers you about that, then follow your conscience. But you do not morally have to sell Disney inherently. It's not inherently evil to own an Apple stock, even though some people download pornography on their iPhone. That's a conscience decision. And if that's your conscience, follow your conscience. But would it not be, at least consider the possibility of owning the stock and then attending the annual meeting and speaking up, talking to investor relations, voting against bad board members who are pushing this stuff? Wouldn't you have more influence? Wouldn't you be more biblically responsible if you actually engaged and used your voice rather than saying, I'm going to be pure, I'm not going to own anything that has any wokeism in it? Because frankly, if you don't own anything that has any wokeism in it, you're not going to own any tech companies or large banks at all.
Sure.
I mean, you're increasingly out of the entire market now.
Right, and that's very hard to do. But at the same time, as a shareholder, we need to be responsible for where we are putting our money and what's going on with that investment. Doesn't
Yes.
mean that, like you said, we don't have to not or to sell that share of that company or those shares we own a company we object with. We can actually speak up and make a difference. And I think what you've done, Jerry, is really empowered a number of investors to take a stand. And if anything, really, it's brought more light to the biblically responsible investing movement for people really voting with their conscience, with their values,
Right.
and but it doesn't mean that we have to exclude everything. There's a lot of things
Well,
we
right.
can
So
include.
let's say you own a BRI product. Okay, great. You can't screen out everything, right? So maybe I don't want any tobacco companies, et cetera, because that's inherently, maybe you said it's inherently evil. But there's always going to be sin in the portfolio. There always will be. You can't screen everything. So what about the sin that's in the portfolio that you haven't screened? Engage on that. Talk to them. I mean, Jesus sat down with tax collectors and prostitutes. He benefited from their ill-gotten gain, but they benefited more,
Right.
because he spoke to them and shared his biblical wisdom.
We have to be a light in this world, fallen
Yes.
world. And Jerry, you've been doing a lot of light shining in the last several years, and we thank you for that. I think it's we're talking with Jerry Bowyer. Jerry is the author of The Maker versus the Takers: What Jesus Really Said About Social Justice and Economics. You can Google Jerry, or you'll have a link to Jerry's social media pages on our website at spendlifewell.com in the coming week. I think, we've really enjoyed your time here, Jerry. I want to tell
Thank you.
people about your podcast, because I listen to it every week. It is very in-depth, very insightful, and that is the Meeting of Minds. The Meeting of Minds. Excuse me. I don't want to add extra words there to the topic there, but Meeting of Minds. If you are a podcast listener and you like to listen to podcasts in whatever form, I encourage you to check out Jerry's. You can find those, I guess, on every platform there where
Yes.
you search for podcasts.
Right. Or you can go to meetingofmindspodcast.com, or you can go to Salem Podcast Network, or like you said, any of the podcasts, Apple, Spotify, whatever. It's on all of them.
Great. Jerry, we want to thank you for joining us today. I know you had a little under the weather there, and your voice hung in there. We thank you for your time. We thank you for the contributions you're making to Christian financial advisors and to Christians, really, that really want to be, like I said, shining that light in the fallen world. So, folks, we've enjoyed having Jerry on this week. And remember, we're here every Saturday morning, 8 a.m. On the Bridge, Austin. You can send us a message at radio@spendlifewell.com anytime during the week, or give us a call at our offices, 800-491-4508, 491-4508. Jerry, thanks as always.
My
An
pleasure.
excellent and entertaining co-host today. So I appreciate your time. And we thank you all for listening to the Spend Life Well show. We'll see you next week.